record in 3, 2. Welcome to another episode of Million Dollar Stories, where we get to interview authors from all over the world. I love talking to authors because they have the courage to take their thoughts, their stories, their lessons, put it down in a book and share it with the many, ultimately changing their legacy and destiny in the process. And if you're looking to write a book out there, check out dreamstarterspublishing.com. We can help you out with wherever you're at in the process. And if you have a book that's already done, you want to generate leads for your business, check out bookmarketingcrm.com. Now, most of the people who listen to this podcast are entrepreneurs looking to start or grow a business. In order to do that, you really need to understand accounting and tax preparation. The more I started to make, the more I fell in love with understanding the chess game. And that I use that phrase with a pun attached to it, because the book that we're going to be discussing today has a chessboard on the cover of the book. And if you understand taxes, you are way ahead of the game. You can start to play the game at a very, very high level. And that's why we are going to be discussing the book, Fundamentals of Taxation for Individuals, a Practical Approach. Now, many students, I guess, read this book in their classes, but it's going to be fascinating to talk to the authors today, Gregory Carnes, and Suzanne Youngberg. Thanks so much for being here.
Thank you for having us.
Well, let's start off with the genesis of this book. I know that this is really for students, and I guess what made you guys want to come together and write it? And if you guys can give a quick little background on where you come from and how you ended up in this world of taxes.
Okay.
Jump in first with a little bit of my background, and then and mention where the book came from, and then Suzanne can jump in with her background. But I'm a tax professor. I've been teaching taxation actually since 1991. I got my PhD in 1991 and began teaching taxation at university since then. Currently, I'm the dean of the Sanders College of Business and Technology at University of North Alabama. Been here about 17 years, but previously, one of my previous institutions was Northern Illinois University, which is where Suzanne Youngberg teaches, and so we were colleagues there, and we got to know each other. I got involved with taxation just because when I went through my undergraduate accounting degree, I found taxation to be much more interesting to me than auditing, and wanted to get into the tax world and tax planning when I worked in public accounting, which is what I did in the tax world before I went back to actually get my PhD. Kind of the genesis of the book is that I have actually worked on CPA review programs to developing tax content for that for about 25 years. That was initially for Wiley CPA Excel, which was one of the leading CPA review programs in the world. That particular product was purchased by a company called UWorld, which is an exam prep corporation based out of Dallas, Texas, just a little over a year ago. And but about 7 or 8 years ago, I needed help with the CPA review preparation of the tax content there, as we were making sure we kept pace with the many changes that were happening on the CPA exam. So I asked Suzanne Youngberg to join me with that. And then about 4 years ago, Wiley came to me and said, hey, would you be interested in writing a tax textbook? Because Wiley is the #1 publisher of accounting textbooks in the world, but they didn't have a tax textbook at the time. And so I told him I would be interested as long as we could take an innovative approach to it. I didn't want to just do a cookie cutter of that was similar to the other products on the market. And I asked, I needed a co-author. So Suzanne and I were already working together well. So I asked her to join me. So Suzanne, go ahead and update them on your background, how you got to here.
All right. Well, thank you for listening today. I'm Suzanne Youngberg, and I teach at Northern Illinois University, like Greg mentioned. That is also my alma mater. So he was talking about, sitting in the classroom as a student, and I remember being almost into my senior year and thinking, do I want to be an accountant who had just spent this money going through this degree? And I wasn't quite sure of what area I wanted to go into. And that's a wonderful thing about accounting, is that there are so many different choices. But then I took a tax class with a wonderful professor, and she kind of, just kind of lit it up for me. And I was like, I could see myself doing taxes. That is something that I would find to be very rewarding. to do in the future to help clients and people who didn't understand their taxes. And I had a single mom, and she had a neighbor who did her taxes. And I remember her saying, "Oh, I can't wait until you graduate so that you can do my tax return." And so that kind of began my love for learning the topic. And like Greg, I went into public accounting. I worked in public accounting for about 5 years. And then I was married and started having children and decided to do a different career route. And I was fortunate enough that I got to teach continuing professional education courses for the firm that I worked for. And so that gave me my first taste of teaching. And then I got my first shot to teach one tax class, and I fell in love. And I was like, this is it. This is what I want to do. And at that time, I had passed the CPA exam. I had gotten my master's degree and taught for 7.5 years at a 4-year liberal arts college, and then got hired at NIU. And I was thrilled to come back to my alma mater. But during that time also, for about 30 years, I had my own tax practice. So I took a little bit different approach. A lot of tax professors are PhD like Greg, and I don't have that distinction, but I've been working in the field for 30 years doing people's tax returns. So my specialty was doing individual and small businesses. So Mike, you had mentioned about small businesses and trying to help them and that entrepreneur. I would go out, people would know that I was a tax accountant, and literally, like if I went to church, people would just start, "Oh, you're a tax accountant?" And, they'd start asking me questions as we're trying to walk out of the building and such. So it was very rewarding to be able to take a topic that I was really interested in, that I've been doing, working in practice, but then also bringing those same stories to the classroom. I felt like that gave the student a real world example to go off of. So it wasn't just some textbook example, but I would say, my landscaping client or my escape room client, or I had this individual who owned a rental property. And I felt that, the students related to that better when I had these real world stories. So like Greg had said, he invited me on to work with Wiley CPA Excel and working on task-based simulations. And that was very interesting work. And then was, thrilled that that we could become co-authors on actually, we have 2 volumes for this book. We're discussing the first volume today, but now we're working on a business entities volume as well. The complementary text to the first volume. So it's been a lot of fun. It's been a lot of hard work. We've learned a lot throughout the way, but it's been great. It's been great opportunity.
Well, I don't know if you guys chose the cover or if Wiley did for you, but why a chessboard? Am I onto something that basically it is just a game, right? I just think everything's a game, but to me, if you understand taxes, you could play the game way more efficiently.
That's a great question. So, and interesting, the chessboard that's on the cover that you're talking about, that was actually developed by an art student here at the University of North Alabama.
Oh, that's awesome.
Yeah, so the kind of an interesting twist with that. But the reason for the chessboard is that our approach in the book is, the tax world kind of gets divided into 2 broad categories: tax compliance and tax planning. And most people who are CPAs and or tax professionals, they do some of both, right? There's some overlap there, but there are folks who specialize in one or the other occasionally. And while tax compliance can actually lead to a good career for someone, just doing the compliance work, because once again, there's a lot of folks who aren't CPAs who do tax compliance work, right? There's nationally branded companies who have locations across the United States that you can go in and get your tax return done, and those aren't usually being done by CPAs, and so those are just focused on tax compliance, where I emphasize with my students actually the first day of class and at the big chapter 1 of this book is that tax planning is where you're actually making a difference for the client. All right, it's you do tax planning before the transaction happens. Okay, once the transaction's happened, then the tax professional it can't help you structure it in a way to give a more tax efficient result because it's already happened. So tax planning is where you really feel that value that you're adding to the client. And so in order to do that, to be a good tax planner, you need problem solving skills. You need to be able to think actually creatively. A lot of times the word creative doesn't necessarily go along with accounting for most people. But for those who are actually very effective at accounting, particularly taxation, creativity is an important skill set, because you need to be able to think outside the box. You need to be able to think of alternatives. Once again, we're approaching this from a legal perspective. So, we teach how to do tax avoidance, okay, which is legal tax planning, as opposed to tax evasion, okay, which is illegal tax evasion, which is not reporting your income in an illegal fashion. But as you think about, for those who want to be doing tax planning, in order to do that, they have to understand the why of the tax law. So one of the unique approaches we take in the book compared to our competitors out in the academic market, which more just focus on how, what the law is and how you approach it. We try to make sure the students understand why the law is the way that it is. Why did Congress decide to set the law up for that particular transaction? What was their goal? Because if you want to be a good tax planner, you got to understand why the law was put in to set to, in the first place, so you can then think about, okay, but are there alternative ways where we can find ways to plan around that particular transaction? So to be a effective tax planner, you've got to be able to think strategically. You got to be able to think a couple of steps ahead, like you do with chess. And we didn't initially. Here's what's interesting, Mike. We went to these. I went to these two art students here that an art professor recommended to me and said, "Look, here's our books about problem solving. It's about understanding the why, how to think outside the box. Y'all now try to come up with an image for the book cover that might reflect that." They were the ones who actually came up with the chess. One of those came up with the chessboard idea, and our editors at Wiley was like, "Oh my word, that's fantastic," and so we've run with it. So
Oh, that's a great story. Hopefully they got paid a little bit at least to put their
they
design on there.
did.
All
Okay,
right, that's
Wiley
good.
They got to put
Wiley
it on
did
their
pay.
resume too.
Yeah,
So,
that's right.
you
That's
know,
awesome. Well, the history of taxes, I think it's fascinating too, when it even comes to the beginning of the income tax. And like you said, why are the taxes put in place? Why did Congress or the people put these words down on a piece of paper to say this is what you can do, this is what you can't do? And to not know about it is like a sin, right? You need to know what the IRS code is, right? And I think there's a reason maybe we're not taught it in school, like in high school, in grade school. Were we ever taught taxes? Absolutely not. And there's a joke in my circle. Basically, it says they don't teach taxes in school because if they did, everybody would graduate a conservative. And so the more you understand it, the more you realize, man, I really should have a business. I really should have a way to, make money and be able to keep it and then pay taxes. And now I understand the tax code to some degree. Obviously, there are experts out there, but to understand it to some degree, the incentives and rewards, it's the invisible hand. It's there to reward you if you do invest in this certain area to create jobs, right? So if you can kind of give a quick little rundown on maybe some of the history of taxes, if you can, and even income tax was supposed to be temporary and then it stayed permanently. So anything you could share that could maybe give some light on certain reasons why the tax code is what it is.
So, Suzanne, I'm going to start with a general broad answer, and then while you're sort of thinking about maybe a couple of specific situations you want to talk about, but one of the things we actually talk about in chapter 1, Mike, is exactly what you were just saying. We say, here's the way we phrase it: the IRS is an uninvited party to every financial transaction that happens.
Yeah.
And really even broader than just financial transactions. So, and I give an example in my class the first day. I'll say, so I'll pick out two students and I'll say, okay, person X here, you're selling a car to person Y. They've agreed to pay you $5,000 for the car. So you're getting ready to consummate the transaction, and often I show up and I say, hey, I want you to know, before you finish this transaction, I'm going to take a percentage of the sales proceeds. Okay, now y'all go ahead and sell the car if you're comfortable doing that. And of course, the point is that now all of a sudden they're like, well, wait a minute, who are you? And and why do you have the authority to do this? And most importantly, what percentage are you going to take, right? If I'm taking $10, okay. But if I'm taking $1,000 of the $5,000, 20%, that may change whether the transaction even happens or not.
Bingo.
And so the point I make to them is anytime a business owner engages in any transaction, or an individual in their personal life for that matter, and they don't know what the tax consequences are, it's no different than that person selling that car for $5,000 having no idea what this uninvited party who just showed up, what they're going to take from the transaction. So that's why another way to say that is that the goal of tax planning is to maximize after-tax income. Okay, the goal of tax planning is not to minimize taxation, because to minimize taxation, that's zero. If you do that the best you can, that's zero. If your goal is to pay no taxes, Suzanne and I can set you up for that very, very quickly. All you have to do is don't make any money, and you will not pay any taxes, right? If that's your
Yeah.
goal. But our goal, but the real goal should be to maximize after-tax income. See, and that's where understanding the tax effective transactions that you obviously understand, Mike, comes into play. So Suzanne, I'll now let you maybe give a little more concrete examples.
Well, I just had a couple of things that came to mind when you were talking. And I think that with our students and then also with the clients that I had, we're thinking, they're thinking that tax is boring and that tax is too complex for them to learn. And it isn't. It really isn't. There is a foundation. All right. There's principles that you need to follow. There's logic behind it. And if you understand that logic and you can follow the logical step-by-step approach, you'll be able to get to what you want to do. With my students now, when they walk into the classroom, a lot of them are 20, 21 years old. And so when you say taxes, they're a little nervous about taking the class. It's a required course. They have to take it. But most of them, I say, how many of you have a W-2? And we start there. We just start with something that they know. And we start with the W-2 and I show it on the screen and I tell them about, look at all these taxes that were taken out. How come my gross income's here and my take-home pay is way down here? What happened? So it's a good discussion to get them thinking about something that they can relate to. And then same thing with my clients, they'll approach me and say, well, I'm thinking of starting this business. What are some things I should look for? And of course, we talk about entity type and advantages and disadvantages, but it still goes back to the same foundational principles and that logic that's behind the law. Now, way back when, way back when, we were just think of a bartering system. If you're a farmer and you need something and you were looking for something, you would just barter, right? And that's what you did. And maybe there wasn't that outside third party initially, but there were governments being created and there were, local governments, state governments, federal government that's being created. And we have to contribute to that to have that run efficiently and take care of some of these other things that the government wants to do. And so in order to do that, you have to have some sort of system to collect taxes. And it didn't go over well in the beginning. A lot of people were like, I'm not paying taxes. Are you kidding? You can't just come in here and tell me I got to pay taxes. But then eventually they did make it constitutional. And so you can't file a tax return anymore that says unconstitutional across the front of it because it is constitutional. And so just, getting people to try to understand some of the reasons behind the law, I think that helps people feel a little more comfortable. I was just reading, I was just scrolling through my Facebook and something came across about somebody saying, I'm happy to pay my taxes as long as I'm not paying more than my fair share. So if I can organize my transactions so that they're tax efficient, then I feel like I've done a good job with paying my taxes because most people do understand that they have to pay something.
Yeah, it's mind-boggling to hear how many people are so afraid of taxes,
Yes.
right? I don't even want to think of them. I don't want to do them. I don't want to study them. And I'm just going to pay somebody potentially to worry about it for me. But like you said, just having a basic understanding, having the fundamentals will allow you to have maybe clarity. You can articulate maybe some solutions a little bit easier. Plus, you know what to do, what not to do, and maybe have a higher level conversation with that accountant. And you bring up a very good point before about you know, what you want to do the tax planning before the transaction. I remember sitting down with my client, and I don't think I maybe just broke six figures at the time. And I remember sitting down with my client who is a tax professional, and we did a book with him called Cash Flow and Grow, and Tony Robbins' business partner. And he's like, when do you meet with your accountant? I'm like, oh, I meet with him right at the end of the year, December. And then he's like, what? What are you doing? He's like, you need to meet with him. It's too damn late. You need to set up time in the year. I'm like, oh, you're right. I should meet with him in January and plan the year rather than
Right.
at the end of the year. So it made so much sense. And I started to play the game way differently after that conversation. I think many people are in my boat, though. Same boat that I was in, right? Where they're like, oh, well, I'll worry about taxes right before the end of the year. Well, too late. So
Right.
there's
Mike,
that.
Mike, if I could, go ahead, Suzanne.
I was just going to say, it's ideal when I had my clients, especially if they were paying quarterly estimates and they had a business on QuickBooks, was to do that review frequently to make sure that they weren't, one, reporting things in the wrong area and being misled just because they didn't understand how to do accounting to begin with. So I would go in and clean up their QuickBooks first, make sure that that was all in order, and then we could work on their taxes throughout the year. I mean, working with a client 4 times a year, you build a really good relationship. And I don't think that people understand that how important that relationship is. They need to feel comfortable and confident in you and your abilities to work on their behalf. I mean, as a tax accountant, you are the advocate. You are the advocate for that client. So whether it is compliance work, which is just preparation, or you're doing planning, or if they receive a notice from the IRS, that they shouldn't fear it because we've done it all correctly. We're just responding to a notice. And that sometimes takes some years of working with them to build that trust. And that's what I found most enjoyable was the communication throughout the year. Some clients, yeah, I just did their tax return. I just prepped, signed off, and we were good. But the businesses in particular, definitely meeting with them more than, once or twice a year.
Plus, they understand your vision and your business more. So the relationship gets stronger, but
Yes.
their understanding of how they can help you probably gets stronger too.
Yes. Yes.
Mike, one thing I was want to say to your listeners today is this question may help them assess where their mind is with taxation. Is it in the right place or not? Which is this. So here's a question: is a refund a good thing? Most folks, when they go in to get their taxes done and they find out they're getting a refund, they get excited. That's okay, I got a refund. And there's actually one, this is about 10 years ago, but there was one national preparation firm. I remember I use this in class. They would say 86% of our clients get a refund. And I would tell my students, now they run that ad because most people think that's a good thing.
It isn't.
But here's the thing: 86% of all Americans get a refund because the IRS tax tables for wages are set that employers have to use. They're set up to withhold more than what the average American has to pay because Uncle Sam knows that unfortunately, if folks owe on April 15th, too many don't have the money to pay them in, and so they actually withhold more. But as you were shaking your head, Mike, and agreeing with me, if you're getting a $4,000 refund on April 15th, you just gave the IRS a $4,000 interest-free loan for the last 12 months.
Right.
And so that's why you want to be doing the tax planning during the year. You don't want to owe, but you also don't want to be getting a big refund because you'd rather have that money yourself working for you.
Yeah, you just gave the government a loan.
Yeah, the idea is to just, pay in what you need to not have a penalty. You don't want to incur a penalty, but you don't want to have that big refund either. So that's why there's we teach that in our class about how to structure your quarterly estimates and withholding to make sure you don't have any penalties.
So when it comes to fundamentals, obviously for students is a little bit different than, let's just say, small business owners, but are there any fundamentals that you would be able to share with our audience who most likely is about to start a business or has a business already? And my only assumption is, even if you don't have a business in your name, you could start to create that additional income. And what do they call? I guess it's just considered a 1099, but additional income, and then being able to prepare yourself accordingly by either putting a structure in place, some entity, whether it's an LLC or an LLC with an S corp selection. certain basic principles probably remain the same. There's a pathway to take, and there's some things that no matter where you're at, you could start to put in place starting today. So anything you would be able to share with us?
Yeah, so I'll mention a couple of things and then let Suzanne jump in. For you mentioned the different business entity types there, Mike, and so certainly a early decision is probably one of the first decisions is what type of business entity should I be? You should not be just a sole proprietorship, okay? And too many people just start a business themselves and they don't form like a corporation or limited liability company, and the problem with that is they then have unlimited liability, so their personal assets are at risk, for debts and claims against the business itself. Whereas if you form a limited liability company, or you form an S corporation, then you have limited liability, and you're if the business ends up being sued, all the business assets could actually be may have to be given to creditors to satisfy some type of claim against the business, but your personal assets are protected. So you definitely want and the two most common types you see for small businesses are limited liability companies. If it's just one owner, it's usually called a single member limited liability company, and then S corporation. So that's usually the two that it most often comes down to. The second thing I'll say, and then let Suzanne jump in, but when I have a friend or that I see is now all of a sudden started a business and they're all of a sudden taking off and doing pretty well, the first thing I say to them is make sure you're making estimated tax payments. All right. Because that first year that they're doing really well, too many times that they're not making those estimated tax payments because they're used to getting a W-2 and the employer withholds the federal income taxes from their wages. But now you're making your own money. You got your own business. Unless you're paying federal income taxes in once a quarter, then those aren't being paid in. And the reason that you see so many companies running these ads on national cable channels saying, hey, if you owe $10,000 or more to the IRS, call this 1-800 number, is because you got a lot of people out there who started making money and didn't realize they need to start paying taxes in, and then they weren't saving that money and setting it aside. And so then when their tax preparer says finishes their tax return, and all of a sudden they got a $10,000, $15,000, $18,000 tax bill that first year because they did do really well, they made money, but unfortunately either they spent a lot of it or they invested it back in their business. But the point is they don't have the cash to pay the taxes today. So lesson number one, and related to the estimated tax payments, is you need to get a good CPA. All right. You need to get someone that you have a good relationship with, that you can trust. Too many people, because they don't really understand taxation and accounting, they say, I'm not sure that's a necessary expense. That's going to be penny wise and pound foolish. Okay, that's going to save you a little bit of money in the short run, but usually it costs you a lot more money in the long run because of what we're talking about today. The CPA can help you save money by doing your tax planning correctly. Suzanne?
Well, yeah, real quick, I just want to jump in there.
Yep.
When it comes to that person you're going to hire, do they necessarily have to have some background? Like I chose one based off of his small business background. Is that crucial that they have a similar mindset, similar mentality when it comes to entrepreneurship? Because that's what I was looking for, and luckily I got a great person. But do you recommend that to everybody?
I mean, I don't know that I would use the term that they had to work for a small business, but I would say, you're looking for someone who has experience, right? I mean, they may have started off with an international accounting firm, and they were dealing with Fortune 500 clients, so they weren't in a small business. But they learned, they were in a setting where when they were young, they learned from others above them. They got that experience. I would be a little cautious about hiring someone who's been out of school a year or two and didn't have much experience
Good deal.
themselves. So I think that's what you're getting at, Mike. So
Yeah. I just wanted a Street Fighter entrepreneur, basically.
yeah.
Because at least he thought of things like on the come up, right? Just the same way, rather than just was inheriting a business or was in a Fortune 500 company.
Mhm.
I don't know, ground level entrepreneurs. I don't know what it is where the senses are heightened. And so that's what I was looking for. So I'm glad to hear that you're just looking for experience more than anything else. That's good.
I just wanted to add one thing when Greg was talking about being aware of liability. So when I would have people approach me about, well, you do my tax return, I've got thinking of starting this business, there were certain questions that you would ask. And the liability question was definitely one of them. Is that, are you going to be taking out loans from a bank? How are you funding this business? Do you anticipate losses in the first 4 to 5 years? Are you the only owner? What other cash flow would you have coming in? What, what area jurisdictions are you going to be operating in? And then are you looking, for a corporation to pay the taxes? Are you looking for a flow through entity? So we had lots of really good discussions on creating that company. And I found that the one thing that most clients did not understand was the concept of self-employment tax. They got income tax. They understood that I'm going to have, this amount, and we're going to get this, this tax return, and this is my dollar amount, my deductions off my revenue. And then I'd say, that's your income tax as a flow through entity, but you also have, let's say you're a general partner, you're going to have self-employment tax. And so they didn't understand that. And so that was another concept that we had to make sure that they understood, because, prior to that, I actually would inherit clients who should have been paying self-employment tax and they were not. So we had to go back and amend returns. So it's just one of those things that if you're a partner, a general partner in a partnership, and you have, subject to self-employment tax, just like a sole proprietor would. And that's a discussion that definitely needs to be had.
Yeah, and to make sure your listeners know exactly what Suzanne means with the self-employment tax, people are more accustomed to their W-2. They know that their employer withholds Social Security and Medicare from their paycheck. That's 7.65% in total. They may not be aware that their employer has to match that. So the total amount that goes into the government from your wages is 15.3%. And then, but if you're self-employed, you pay both sides of that. The self-employment tax is for Social Security and Medicare, but it's 15.3%, which is really high. In my opinion, I think one of the best changes we could make to the federal tax law is to reduce that load on self-employed individuals, because like Suzanne, that's completely separate from the income tax. So your income tax plus the self-employment tax, it makes it hard for small businesses to be successful early on. But that's more of a policy issue that that Suzanne and I don't have the ability to change.
When it comes to these basic habits to implement right away, I automatically think of Profit First by Mike Michalowicz. Have you ever heard of that book at all?
Did you say
Heard of it,
profits
but I've not
first?
read it.
Yeah. Profit First by Mike Michalowicz, where basically you take your money and you separate it early on. Therefore, they each go into their buckets, right? Tax bucket, right? You get paid first bucket, and then basically what's left over, therefore the worries are gone. You get paid first. And so I started to implement that, but I also implemented a bookkeeper, not right away, but eventually. And now when I have a bookkeeper, I have that person managing it, and therefore it helps me implement the profit first technique. Do you advise individuals right out of the gate to, number one, have a bookkeeper, whether it's an hourly person, to get right into it, but also to abide by the profit first strategy, if you're familiar with it at all? It's some book that's pretty common in our circles. So I was wondering if you recommend that right out of the gate as a startup entrepreneur.
Well, in general, I would say yes, but let me answer it more broadly, not just a startup entrepreneur. I tell my students in class, and the reason, and I had a professor in my undergraduate program, accounting professor, who told us this, and I've always remembered it. But he said, you need to start saving, 10% of your paycheck to set aside for yourself from day one. Okay. He said, if you don't do it from day one, all of a sudden you're going to get used to spending that money, and you're going to be thinking, next time I get a raise, then I'll start saving. But you have to get that habit early. So whether you're a W-2 employee or whether you're an entrepreneur owning your own business, yes, you need to be setting aside that money and pay yourself first. And it's important. One of the other really important things that the tax professional can provide the entrepreneur is making sure they know the best way to set that money aside. There's a lot of different retirement planning options, but you want to make sure you're putting your money in a proper retirement plan because it provides significant tax advantages, not just in the year you put the money in, but while that money's growing between then and retirement. It's pretty complex to know which one's right for you, but but that retirement planning can make the difference. 25 to 40 years of savings. If you put the money in the proper retirement type of planning vehicle versus not, that can have a significant impact on what your overall wealth is. So don't just set the money aside. Make sure you're setting the money aside in the proper retirement planning vehicle.
Yeah, like a Roth or just a basic IRA, right?
Well, there's Roth, there's IRA, there's simplified employee pension plans, there's SEP plans, which those who are self-employed can take advantage of. There's also simple plans. The most common ones are a 401k, like a solo 401k for those who are self-employed, or an IRA. But there's lots of others that I would say for those who are profitable small business owners, they more likely need to be in what's known as a SEP IRA or a simple plan. Suzanne?
I was just going to add one thing to that. Again, with going back to my clients that I had, it wasn't just their business that I was concerned about. It was also them as individuals. And so I would say to them, what type of accounting structure do you use for the rest of your expenses? Do you know what your groceries are every month? Do you know what you're spending with your mortgage, real estate, everything?
Ooh.
And most of the time they had no idea. And so I would be counseling a couple and they'd be doing the finger pointing on, well, he spends this and she spends that and this. And I'm like, all right, from this point forward, we're going to work on just looking at your income and deductions for you as a couple. And so whether you are getting accounting software to do that or doing a budget, a lot of people don't even create a budget. And so they don't know where their expenses are going. You have someone who has a child and they say, well, I want to start saving for that child's education. Okay, well, what other money are you spending things on? And so if you're trying to divvy up that money so that you have, you were talking about, saving 10%, or this is going to be my tax bucket, my investment bucket, my child's education bucket. But what are your other expenses? And so that was a conversation I had many a time with people was, what are you doing with the rest of your money? What are you spending it on? Travel? Is it too much? And kind of, not that I'm a certified financial planner, because I'm not, but some of these basics of just creating a budget were really important, which then lends itself to the discussion about how to do it for their business as well.
Well, is the reason why they don't know this, Suzanne, is because it is scary to look at the numbers, right? I think I'm
Well,
always a little hesitant on certain times during certain times of the year. And it's
yeah.
just that automatic fear that we always face. And we say, well, do we really want to know? Because then that's going to put us into hyperdrive mode. And are we ready for that? So some people protect themselves by not knowing the numbers. Is that right? Or they try to protect
Well, you
themselves.
may say ignorance is bliss, but it really isn't. I mean, right? I mean, not if you find that you don't have enough money to do some things that you would like to do eventually, like save maybe for your child's college education and start doing that right away. And travel and such. People don't understand. I mean, both my husband and I are tax accountants, and we still had that conversation throughout most of our marriage was, where's the money going? We're both bringing it. So we started creating not just the initial budget, but then actually using accounting software to keep track of everything, so that there was absolutely no doubt about where our money was going. And that if we had a little bit extra, then what were we going to do with it? And or what area did we need to cut back on because that got a little out of control? And so that kind of plays into all of it when you're just talking about your money in general.
Yeah, I know whenever I was a startup entrepreneur, it's like my heart's in it. My life is in it. I don't really care about the numbers. I'll fix them later. And that usually leads to like a week of just just pure pain going through and getting the numbers right for the accountants so they can go through it. So like, emotions are running high as an entrepreneur, but you got to do things the right way. And you do need to look at your numbers consistently. Some of the really, really successful people that I look up to, they say they look at their bank account and the numbers daily, right? I'm not looking at my numbers daily, but weekly now, right? So going from once a month down to once a week, down to once a day, it all depends, I guess, where you're at financially and what you're moving. Because it's like if it's a chessboard and you have many resources, you need to be a great steward of those finances, and
Hmm.
you need to be more on top of it. It's almost like getting in a jet airplane. You might be in a propeller for a while, but the moment you get into a jet, you can make a mistake, and then those mistakes happen way faster.
Yeah.
Mike, I wanted to follow up on something Suzanne was just saying she talked about college planning. So I mentioned retirement planning a moment ago, but there's several different options for how to plan for your child's set money aside for your child's college education. In a tax efficient way. So but folks aren't aware of those. They need advice. And in our book, I mean, in terms of retirement planning, college planning, we go through all those options. And then I was just thinking also, I mentioned earlier that, the IRS is an uninvited party to everything that you do. Many of your listeners are in that startup phase with entrepreneurship, but what about those who've been very successful? When you start getting further along in your business and now you start thinking about, okay, what's going to happen to my business once I get more toward the end of my career? I mean, those are things that you really need to be discussing with a very qualified tax professional, preferably 10 to 15 years out before you're about what your exit strategy is going to be. You can do that in a very tax efficient way, or you can do it in a way that's going to be very tax costly to yourself or to your family later. So really, I mean, every step of the process, from the time you form your business, you need tax advice. How to set money aside, you need tax advice. And then how you're going to at some point dissolve your business or pass your business on to the next generation or sell your business. You need tax advice on all those stages.
Hmm.
Yep.
Yeah, they always say it's not how much you make, it's how much you keep. And so,
Hmm.
you might say, oh, I make $1 million, but if you live in California and you
Yes.
make $1 million, I mean, that's really not that much money, not only because of the cost of everything, but the amount taxes are going to take from you, right? So
Right. Right.
keeping it is the game. And so when it comes to keeping it and like you said, passing it on to generations that are going to be after you, I would think, and this is what I've seen in my mentors. I got into real estate right out of the gate, but then I got into startups, and so I make my most of my money from my businesses. But I have a little bit in real estate now. But the benefits of real estate are tax wise are incredible when it comes to depreciation and a tangible asset that's sellable, and it basically appreciates in value, automatically increasing your net worth as time goes on. So when it comes to strategies to save it, whether it's life insurance or investment accounts or real estate, where would somebody go, or what do you recommend as maybe step 1, 2, or 3?
That's
Suzanne,
a
you
good
want to
question.
start
You
with that
also,
one? Or?
well, immediately, Mike, when you were talking, I was thinking about risk. What's your risk level? How much involvement do you want with that activity? So you had mentioned rental properties, and we had a rental property for a while, and it did quite well. And you were talking about depreciation, and so you're talking about you could potentially have a tax loss, but your break-even cash flow could be very close to zero. And so that you're thinking that's a great situation. But you also have to pay attention to how much involvement that you want with that activity and how many of those types of activities that you want. Do you have a management company? So there are some other things that come into play. When you were talking about like investments in general, are you risk averse? Are you a younger person? Are you a middle-aged person? Are you older? How much time do you have for that to grow? And yeah, just your comfort level with risk. Just those things were coming to mind that you would have to take into consideration.
Wow, those are great
Well,
questions. And yeah, everybody's at a different point. They all have different strengths, they all have different personalities, but my risk tolerance is very different than my brother's, right? So we came from the same womb, right? But we're very different when it comes to where we put our money and what we do with it. I'm totally cool with doing certain things. He's not. So great questions that you as a tax professional probably ask, and you would want that from a tax advisor, right?
Yes, yes.
Great stuff.
yeah, you do want your no, those are important things, from a Suzanne mentioned a moment ago how well a CPA gets to know their clients. If you actually think about it, when you see a person's tax return, their Form 1040, you learn a lot about them.
Yeah.
Okay. You
Yeah.
you learn about, I mean, you might see a tax return where somebody's making $500,000 a year, but they basically have no investments. All right. So it's that kind of like, are they not saving anything? You learn about the types of investments they're in. You learn about how philanthropic they are or they're not. You learn so
Yeah, that's a
much
good
about
point.
that. When you talk to business owners and ask them who is their most trusted business advisor, CPAs always come out number one on that. I mean, that's where, so CPAs really, we're not just tax advisors. We're not just doing, accountants who do work. Business owners see us as business advisors. And a qualified CPA, knows also when to say to their client, this is out of my league. Okay. In other words, I can help you find somebody who has expertise to help you with this particular question you've asked me, this issue you're dealing with, but it's really not something that's in my expertise. But I wanted to emphasize many tax professionals actually do personal financial planning also,
Mhm.
because it lends itself, so much about it. Matter of fact, there's the American Institute of CPAs has just in January of 2024 released a new version of the CPA exam, and for the first time in the history of the CPA exam on the tax part, they're now actually testing personal financial planning. So the things you were asking about, Mike, like you brought up insurance, and how much life insurance do you need? How much property insurance do you need? Do you need long-term care insurance? Those types of things. Those are now actually being tested on the CPA exam, and so that shows you that that's a very central part of what clients want their CPAs to help them with. So it's much broader than just your tax return.
Hmm. So you guys are on the ground zero of, I think, of the tax discussion, and with everything that's happening in the world, you probably have heard Biden talk about unrealized gains taxes because he wants to he wants to tax people for unrealized gains. Absolutely mind-boggling. So, what do you see coming down the pike, and what do you recommend? Even though this isn't financial advice, obviously, but what do you recommend? Let's just say if it was to your kids or whatnot, what do you say to do for the upcoming year or two? That's pretty scary potentially.
So let me talk about tax rates first. So your corporate income tax rate is 21%. Um, that's not for an S corporation. It's what's known as a C corporation. Um, a C corporation, usually I mentioned that most small businesses are S corps or LLCs. Usually they're not C corps because C corps can have double taxation. In other words, it's taxed at 21% to the C corp, but then when the C corp pays out the earnings to the owners, it's taxed a second time. But there's times a C corp could be the best entity for a particular business, depending on the owner's strategies. But 21%, the corporate tax rate's never going to go lower than that. And it used to be 35%. The 2017 Jobs Act, which was passed while President Trump was in office, lowered it to 21%. If the Democrats are able to actually pass a new tax bill at some point that changes the corporate tax rate, it won't go back to 35%. They agreed that was too high globally. It was hurting U.S. businesses competitively, but I do think they would like to see it, say, maybe get around 28%. Your highest individual tax rate right now is 37%. Historically, that's actually not a very high number. The lowest it's ever been was 28%, and that was just for a few years under the Reagan administration. If you go back into the 70s, the highest corporate income tax rate was as high as 70%, and just as recently as, well, I guess it's not that recent, but 1986 it was 50%. So my point is that individual and corporate tax rates are really they're corporate is at all-time lows, individuals kind of at historic lows. So I wouldn't look for a lot of changes in those tax rates. In terms of taxing unrealized gains, I don't think that'll get much legs, because at the end of the day,
All their donors would get hit. There's no way, right?
well, from a record keeping perspective and administrative perspective, how the IRS could actually implement that. It's just, it's extremely tough to do. So there's things that sound good, okay, when you're, whether it's Republican or Democrat, there's things that can sound good to your base, but they're never really going to ever be passed because administratively they just don't make sense. Suzanne?
A couple of things that came to mind were our preferential long-term capital gain rates. All right, 0, 15, and 20%. We also have an extremely large, what they call a unified credit. The amount that you can either gift to other people or leave through your inheritance is now, right now, at an extremely high amount. You get other people in office or
Wait,
someone
which
who
was
makes,
that? Which it used to be 10, but it's higher now, right?
oh gosh, it's like 11.92 million. Do I have that right, Greg? I'm trying to remember it's more than 10 though, I can tell you that. It might even be more than 12
Okay.
in
It is.
2024.
It's more than 12.
Yeah, in 2024. So that, let's say that went back to being, 5 million or something, that would be a huge, huge change. And also the long-term capital gain rate and qualified dividend rate, if they were to eliminate that, and it would be taxed at your regular, what we call the ordinary income tax rate, whatever marginal tax rate you're in, that would also be a huge change. So we have, so there were a lot of changes that were made that are due to sunset to go away in 2025 or ending in 2025. So the next couple of years will be really important to try to determine what direction things are going and whether those tax cuts were kept.
Yeah, your business, your listeners might not be aware that all those changes made the individual income tax law while President Trump was in office in 2017. At the individual level, they all expire at the end of 2025, and we go back to what the tax law was as of December 31st of 2017, unless Congress chooses to extend some of those. And whether that happens or not really just happens, really what happens in the November elections, not just in the White House, but also in the Senate and the House of Representatives. And so now the corporate changes that were made back in 2017, those are not scheduled to expire and go away. Those were considered to be permanent. But there's a lot of potential change. And with the unified credit that Suzanne was mentioning, I would say that if the Democrats had control of the White House and the Senate and the House, so they could get a tax bill through that really reflected more of their desires, I think you're going to see that unified credit come out a lot. So even if it went down for most of us, if it's $5 million, it's still a whole lot more than what our net worth is, right? But I would say if you've got listeners who have, significant wealth, and right now, as Suzanne said, you can use that unified credit to pass wealth to your next generation. During your life, you can use that unified credit. In other words, you don't have to wait until your death. It might be something you want to talk to a CPA or a tax attorney about. Particularly if you start seeing there's momentum that you think politically could lower that exemption. Because if you could pass, the highest estate tax rate is, I think, 40%. So if you've got a $50 million estate and it was subject to a 40% tax rate, that's $20 million you're paying in estate taxes. Right now, if you're married, you and your spouse can transfer at least, say, $25 million to the next generation and not pay any of that.
Wow.
If you thought if you thought that exemption was going to be, say, cut in half or something, you can see why you, as a family, you might want to think about going ahead and gifting that before the tax law changes. So we're not saying, just to clarify, there's nothing we're seeing that suggests that unified credit is going to be changed like in the next 12 to 24 months. But we're just making you aware that just like it's increased in the past, it definitely could be decreased in the future.
Yeah.
Mm-hmm. Yep.
Yeah. It's great advice. The 1031 exchange, I haven't looked into it. I never did one, but is that gone or is that still around? I remember people fighting over it.
Yeah, no, still there.
Still there.
The 2017 Jobs Act, Mike, did away with it for anything other than buildings. So it used to be that folks who did like-kind exchanges for things other than buildings could defer their gains. But now it's only for real estate, and that's where
Got it.
usually your big games are.
Mhm.
That change, that changed. The only really industry that had a big impact on was farmers. I mean, farmers do like exchange farm equipment, like old farm equipment, a lot for new farm equipment. And in the past, they could defer their gains, and now they can't do that anymore. But it's still around for real estate.
Got it. I thought they were trying to get rid of it for real estate too. So there was a lot of masterminds I went to right around 2022. I remember there was a big conversation that they were trying to get rid of it. So it's good to
Mm.
hear that it's still there though, because I think it's
It's still there for
beneficial.
now, and it's in our book.
Yeah.
Oh, okay, good. All right,
Yeah.
there we go.
Yeah. We don't want
Speaking
to
of
have to
which,
rewrite that chapter there, Mike. So let's keep it just the way it
yeah,
is.
you don't want to have to go back and change it. Yeah, as long as it stays,
Yeah.
right? Is there a website or a social media channel that you guys are very active on? I guess LinkedIn is probably the best way that I've seen. So is there any website or social media that you recommend?
Yeah, we're both on LinkedIn. But
We're both on LinkedIn, and our textbook once again is published by Wiley, and so once again, if you just Google Wiley Fundamentals of Taxation for Individuals, or just put Carnes and Youngberg in there, if you're interested in the book, you can find the book. You can find it at the Wiley website. You can find that on Amazon,
Amazon,
and
yeah.
yeah, other types of websites also. And I mean, Suzanne and I, we also do, we do professional tax seminars. So we teach for accounting firms, we teach for state societies and those types of things. And once again, we just, we taxation is, some people may think we're a little strange, but we actually
tax
we like
geeks.
taxation.
Yeah.
And we think it's, once again, it's the tax planning part of it that's really, I think, exciting. When you're an auditor, there's nothing wrong with auditing. Financial auditors play a very important role in our society, and most of our students go into financial auditing, right? But I think tax, as an auditor, you have to be independent of your client, okay? Because you're really there to attest to whether the financial statements are reliable. And so you have to be independent from them. For tax professionals, it's just the opposite. We're not independent of our clients. As Suzanne said, we're an advocate for our client. And that's what we're expected to be professionally. And so that's why we were both kind of attracted more to the tax side of the accounting world.
Definitely. Yeah.
Well,
Yeah.
I
I
will
had
say,
somebody say to me one time, "You're a tax accountant?" Like they looked at me like, they were surprised, when they heard, they said, "You don't look like a tax accountant." And I'm like, "Well, what does a tax accountant look like?" And I guess there's a perception out there of how tax accountants look, but like I was saying earlier on, it's not boring at all. And it can be really creative and fun. And, working with your clients can be very, very rewarding. And so when Greg and I are in the classroom, we're of course selling our students on the tax route because of that you get to be an advocate and you have that close relationship with the client.
that has to be the ultimate compliment. I don't look like a tax accountant, basically. That's a good compliment. I'm thinking, right? That they meant in the kindest way possible.
Mike, when I tell them I'm a tax accountant, they're kind of like, yeah, you kind of look like a tax accountant. So,
Yeah, that makes sense. Well, I have to say, one of the things that I mean, this sounds crazy, but have you seen people on social media and the OnlyFans girls and all these people are making tons of money right out of the gate without any good habits tax-wise early. And I'm thinking to myself, if that would happen to me, I would have done the worst things when it comes to money, spending on the cars and all the trips, and I would be screwed when it comes to my taxes. So it's almost a blessing that the growth is very slow. Unlike these people who make it and they're like, all right, I spent it all. Where's now I now I owe the government something, right? That could really shake you up. So a slow growth isn't a bad thing because you build the habits the right way. Am I right?
I always think about athletes, these young athletes coming out of school and, getting these big contracts and everything. And my first thought is always, oh, I hope they've got a good tax accountant in their corner to help them, because they don't understand the volume of money that's coming in and what they can do to try to, maximize the after tax cash flow.
But it's not now. But now it's not just when they come out of school with name, image, and likeness,
true.
right? You've got
College.
you got college football, basketball players, getting $1 million or more a year. I don't know the answer to this, Mike, for sure, but I would assume that at your very large universities that have, huge athletic budgets, that surely they're helping those students get some good tax advice. My concern is more the schools like, University of North Alabama. We're about 10,000 students, and we don't have students getting huge NIL contracts, but I do know we have some athletes getting some smaller amounts of NIL, some of the better athletes. And I don't know how much it is, but let's say it's $25,000. Well, if they're not getting proper tax advice, and maybe they end up owing, $2,500, $3,000 in taxes, and once again, they don't have that money on April 15th. That's a tough situation to be in. So you were really referring to the digital economy more, Mike, with OnlyFans and those types of things. And it's much easier to be an entrepreneur now than it was 10 years ago. And once again, that's why you see all these ads on TV. If you owe $10,000 or more to the IRS,
call us.
And I'm not necessarily, I'll be honest, I'm not recommending those vendors. I'm not saying call them or don't. My recommendation would be is find a local CPA for any of your tax needs that you have. I think rather than calling 1-800 numbers, I think that's usually your best route to go.
Mm-hmm.
Yep. Yeah. Do it right from the beginning, because that will stay with you forever. And
Yes.
your life is going to be dictated based off of, if you do it the right way or the wrong way, if you do have that windfall. So,
but we brought up OnlyFans and NIL here in the last 3 minutes, which gets back to where we started. Taxes affect everything you do, right? I mean,
Yes.
It really does. It really does. Taxes come into play with everything that happens in your life.
Death and taxes. That's it. It's the only thing. 2 guarantees.
There you go. There you go.
Guys, check out their book, Fundamentals of Taxation for Individuals, a Practical Approach. And it's the 2024 edition. That's awesome that you put that right on the cover. Came out, I guess, at the end of last year or sometime last year. And it's up to date.
Mike, I sorry to interrupt you, but we update it every year because the tax law changes every year. So the 2025 edition, which is the 2024 tax law, but the 2025 edition will be out in just a few weeks, out on the market also.
Yes.
Okay.
Yeah.
Good deal. So, okay, you do go back in there and you adjust it every
year. Every year.
Got it. So, guys, keep a lookout for it. I guess whether you buy this one or you want to wait for the one in a couple of weeks when you're going to do it. These guys, great personalities.
Or buy both. Buy both. Yeah.
Or buy both. Yeah, you can do that, of course. And then check them out on LinkedIn. I guess you're available for seminars. Can they reach out to you via LinkedIn and hire you if they hear this and they'd love to have you come and speak?
Yeah, they can reach out by LinkedIn. Yeah. Also, like I said, I'm at University of North Alabama. Suzanne's at Northern Illinois University. It's real easy to find our contact information on the accounting department web pages there if they're trying to look us up.
Excellent. Well, thanks so much for being here, guys. I really appreciate it. I never thought, I'm a 39-year-old guy, that I would be so fascinated with taxes and bookkeeping, but business has totally transformed me. So this is the animal that it made right here.
Yeah. Well, thank you so much, Mike, for having us on today.
Yeah, really appreciate it.
We've enjoyed it.
Guys, get your taxes right. Your life will be a lot easier, but get your business right so you can not fear taxes as much. So,
right.
And remember, $1 million book will lead to $1 million life. Right on.